Root out with quarterly results, showing the company continues to outperform with revenue beating estimates by over $55 million. Though, for customers' motor vehicle insurance, it remains a sticky part of the inflation story. Prices are up 20% year over year, and the average annual cost of full coverage for a safe driver with good credit is still almost $2,000. For more on all of this, we've got the CEO of Root Insurance, Alex Timm. Alex, great to have you here on the day, and thanks so much for taking some time here to break down what is a part of the inflationary story here. But you also remind that it's more than just drumming everything up to just inflation. There's parts of this auto insurance business here that adds up to the rising costs here. What is the more pronounced additive within this mix of costs that's pushing insurance premiums higher?
Yeah, and thanks for having us, Brad. We're excited to be here. As you said, we look at car insurance. It's one of the in terms of inflationary pressures this year. It's still rising incredibly fast. It's over 20% higher this year today than it was a year ago, and this is usually a top 5 customer expense. So this is really, a lot of households are really feeling this, and this is from increased parts. Parts are costing more. We're definitely seeing more technology inside of vehicles, and that technology is certainly more expensive to actually repair. And so all of those things are really driving up costs. We're also seeing a shortage of labor. We've seen really since 2019 about $10 an hour increase in wage rates for repair shops. That's leading also to long delays. It takes about 4.5 weeks, a little over 4.5 weeks today, to get a car repaired. And when you compare that to just pre-pandemic levels, that was under 2 weeks. And so there's just a huge amount of demand in the system and not enough supply. And so what you're seeing is really those prices come up quite a bit, and that's really what's driving a lot of the cost trends.
And Alex, we're going to get to some actionable tips for our viewers out there as well to hopefully be able to mitigate some of those rising costs here. But when we think about the new technology that you were talking about as well, it's hard not to think about electric vehicles, which are the most highly technological car that might be out there on the road. How have you seen that change the insurance landscape right now?
Those vehicles, they're very heavy. They're very advanced. A lot of those parts, through supply chain disruption, were harder to actually secure, so it made it even more difficult to repair a lot of those vehicles. That then usually ends up in leading costs. And I'll tell you too, those cars drive differently. One of the things we're seeing is that when you take a driver, and we can see this through our unique data and mobile technology. When you take a driver that's used to a gas-powered vehicle and they begin driving an electric vehicle, which can accelerate much faster, automatically brakes, right? They're driving. It actually takes them a while to get good at driving the electric vehicle. And so you also see this change in the actual driving behavior when you start to see folks start to adopt electric vehicles.
It's interesting. Full self-driving has been one of the kind of hallmark features that's been touted around the future of driving as well. How do you see full self-driving changing the entire insurance landscape?
Well, I think we are very far away from full autonomy and truly full self-driving. However, what we are going to see, and we're continuing to see, is that the technology is going to keep getting better. And so we're going to live in this hybrid world for a very long time where sometimes vehicles are driving and sometimes people are driving. And, for insurance, that's going to really change the liability game, right? Sometimes maybe the vehicle manufacturer is going to be liable, and sometimes the consumer is going to be liable for those accidents. And for us, what's really important is that we know, when is that car driving? And by the way, when that car is driving, how is it driving? Not all of these vehicles and all of this autonomous vehicle technology is actually created the same. Some of these technologies are very good in certain situations, and they're not so good in other situations. So how is the consumer actually using that technology? When are they using it? All of that gives us a really rich view in terms of the risk, the underlying risk that individual is sort of undergoing in terms of whether or not they're getting into a car accident.
All right, Alex, just lastly while we have you, we got viewers out there that are saying, Brad, you promised me tips. Let's get to the tips here. What are some actionable tips that people can employ to hopefully bring down some of their auto insurance costs?
Yeah, I'd say the biggest thing is shop. One of the biggest secrets in the industry is there's a loyalty penalty most of the big guys right now that are out there, if you've been with your car insurance company for a long time, they just consistently raise their rates. They know you're probably not going to shop if they raise your rates 2, 3, 4% every year, but that really adds up over a longer period of time. So I would encourage you, shop, definitely try out Root. We provide the best rates for the best drivers. So if you're a good driver, we're a perfect fit for you.
Alex Timm, Root Insurance CEO. Thanks so much for taking the time here with us today. Really appreciate it.